Good morning and welcome to the Killik & Co market update. This week we've seen markets responding quite well to the result of the midterm elections, and we have seen quite a notable rise in markets since last month. Here's the S&P 500, and as you can see, markets have recovered quite a lot of the ground they lost in the dip last month. Now back to those midterm elections, arguably the result of these was one of the best possible outcomes for markets. Had the Democrats been more successful, it would have been possible for the president to become impeached, and I think that would have been quite a concern for markets. On the other hand, if the Republicans had retained both the House and the Senate, it would have been easier for the government to get more major policy changes through. It would have been possible for another round of tax cuts to be enacted, and that could have potentially led to a faster rate of interest rate rises, and that I think probably would have brought markets down. So as we have it, we've got the Democrats in the House, the Republicans in the Senate, and that sort of gridlock there I think is actually quite good for markets because it means that no major changes will be able to get through easily. So I think what we're looking for now is some further policies in areas in which the Democrats and the Republicans are more aligned. So for example, infrastructure spending and potentially some sort of trading deal with China. Now, I know we've talked about US interest rates an awful lot recently, but we feel this is one of the main issues moving markets at the moment, so we feel it's a really important issue to keep a close eye on. Now, yesterday we had the latest interest rate decision from the Federal Reserve, and as expected, they did decide to keep interest rates on hold for the time being, but it is expected that one further rate rise will take place this year in December. Now, we've been looking at the statement that was issued by the Federal Reserve alongside this rate decision, and here we've got a couple of key takeaways. So first of all, they have said that further gradual increases in the target range for the funds rate will be consistent with sustained expansion of economic activity. So that really just means that rates will continue to go up because the economy can take it. However, they did also say that the timing and the size of these rate rises will be assessed based on expected and realised economic conditions. So that really says to me that they won't just be ploughing on with interest rate rises regardless, they will be taking economic data into consideration. So that is quite reassuring to me. Now, a couple of weeks ago, we talked about the Bank of England's comments about wage growth in the UK increasing. And this week, we've had a couple of companies reporting, which has really shown how this is hurting some UK businesses. These companies were G4S and Wetherspoon, both of whom reported results on Wednesdays, and these results really did disappoint the market. Between close of business on Tuesday and close of business on Wednesday, G4S shares fell 11% and Wetherspoons were down 12%. Results are disappointing because profit margins are smaller, and the reason both companies cited for this was that wage growth had gone up and that it was becoming increasingly difficult to find employees. So this is really quite a concern for companies and for sectors in which automation is quite difficult. Now, some companies have been able to make themselves somewhat immune to this wage growth by increasing levels of automation and reducing the number of employees. However, for companies like this, for example, G4S, which employs huge amounts of prison guards, for example, JD Wetherspoon, which employs lots of bar staff, those are two areas in which automation is very difficult, and therefore these companies are really suffering from increases in wage growth. So that's definitely something to bear in mind when you're looking at your portfolios. Now, moving on to the week ahead, coming to the end of earnings season now, but next week we do have Vodafone, Taylor Wimpey and the Chinese internet giant Tencent Holdings. That's it from us. Have a great weekend and we'll see you next Friday.